My next guest says the U.S. election is an underrated risk for the markets. For more on where in the world he's seeing opportunity, let's talk to Lee Munson. He's Portfolio Wealth Advisors President and CIO here on set with me, freshly back from Japan, all across the country from New Mexico. You got a little different spin on things, I think, than most, one of which is that you actually do think the election is something people aren't paying enough attention to from a market's point of view.
They are. Just let's look at some of the evidence. After that, disastrous debate, we saw, the entire yield curve, the 10 to 30 sell off over a few days. That is a clear sign that the markets are saying a Trump victory is going to be stimulative to the economy. We're going to write up deficits. We're going to have tariffs. And you might see the 10-year Treasury easily at a 4.8 or higher. Mm-hmm. And I think that when you take that into account, that's also going to tell us that we're expecting more growth. That's going to affect Fed policy. Mm-hmm. If we start, having regulation get stripped, if we know we're going to have a bunch of deficit spending, that's going to jack up the Dow Jones. And I think it's going to be a very different world than this idea that we're going to have this slow recessionary environment going into next year.
It's interesting to think about what you just said in light of the discussion we were just having on the timing of Fed rate cuts. So maybe one way to think about whether they should or will cut in September is that they might be wondering if a Trump administration is 6 weeks away that could introduce some of those more stimulative policies and maybe undermine the need for a cut.
Well, I think that we assume, there's that conspiratorial theory that Powell is just a political machine like everything else. And I understand that. And I sort of half agree with it, half do not. But the reality is we think that he's not going to cut till after November for political reasons. I agree with you. He's not going to cut till November because we don't know which way this thing is going to go. We have one, older gentleman that's going to want to tax more and could slow down the economy, but still huge deficit spending. And we have another guy that's going to want to reduce regulation, stimulate the economy, and still run a huge deficit.
And the other thing that's interesting when I look at this, I say, well, Biden also has been massively fiscally expansive and fiscally stimulative. I mean, we're running huge deficits as it is. The economy's doing well. The Dow's doing well. All of those things that, maybe on the long end, there's a difference between Trump and Biden, but I'm not sure that there is.
I don't think there is. And I think that when you look at it in the minutia, sure. If you're into little sectors or you're trading solar stocks versus energy stocks, yes, pay attention. But for a guy like me that sort of, I run money for like old retired people who just want to, have a 60-40 mix and make it hot. It's not really affecting how I'm allocating, what sectors I'm really in, because if we still, even if Biden wins or whoever replaces Biden might win, we should still have a lot of momentum going into next year. You can still see small caps forward 12 months, they're still, expected to earn, 8-9% large value. So even old, stodgy widow and orphan stocks are still expected to earn. But I do worry about that Helen of Troy issue that
listen,
Don
I think that is a major story today. And what is the story? The story is that all of the price hikes that we've seen coming down the pike, the companies now have to reverse them. When they're reversing them, when it's a disinflationary or outright deflationary, their margins were horrendous. Their sales, their top line is bad. The only thing we can hope is that this becomes idiosyncratic to just one part of the economy and not all of it.
Well, I hope so, too, because, a lot of people, think I'm a cool, middle-aged dude. I must only have the NASDAQ. But I've got a lot of old economy stocks. And while they compound over time, I'm very concerned whether those estimates are off or not.
Oh, sure. And you get a day like today, it undoes a lot of that compounding. The last person we spoke to who does a lot of portfolio management for retirees said all of his clients wanted to be more risk on. They loved their NVIDIA. He's telling them you got time to sell and pare back, and they didn't want to. Just talk a little bit about if you're experiencing anything like that or what you would do about the narrow leadership and whether you lean into that because that's where the earnings growth is. Maybe they still have that margin expansion versus the rotation.
So here's the deal. I grew up in that Warren Buffett world, right? I grew up in a traditional, you buy value stocks, you do that thing. I recently rebalanced. I have a bunch of treasuries from, I bought the October low last year, so I rebalanced about 100 points ago. Very happy. If we get an August to November surprise and get a pullback, I'm not saying a 10% correction. We don't know. Just a 5% pullback would be nothing. I'm not exactly going to throw that money that I took off the S&P back into small, large value. I may look at some utilities because I think that AI is going to start jacking up electricity demand. And when you look at the last 10 years of, fossil fuel usage for electricity, it's been flat. I think that's going up. But really, I'm looking at the NASDAQ still. I'm looking at that Mag 7
with
exposure.
Excitement.
It is. And, you're talking about 20 plus, you're talking about 25%, 20% earnings growth going forward. As much as I hate it, as much as I despise tech because I grew up in the dot-com world.
This is what's so ironic. Yesterday, Rich Bernstein has told us that the market leadership now, and Bespoke has similar data, the leadership now is as narrow as it was in March 2000 at the very tippy top before the crash. And Bernstein would say, so you think there's no bubble? I mean, what do you say about stats like that with a sense of deja vu? But the earnings growth is so different.
I love reading his stuff. I'm a secret admirer. But, that's that older value, old economy idea of mean reversion. I no longer believe in mean reversion. You heard it here. I don't think that just because, I think a lot... What made value work in the past was the churn, was you get stuff that blows up, rises from the phoenix, but you don't have enough Bernsteins around. You don't have enough people like me who are really dedicated to value investing anymore. Einhorn's been talking about this for over a year. I think the market structure has changed, and I think that private equity over the last 15 years from zero rates, anything good in value land has been taken. It's done. It's private. So now we're back to a Peter Lynch idea that the values, small value, large value, those are asset plays. Look at 2022. Saved my rear end in relative performance. Clients very happy that we had the value. So I think that the reason you should
keep the exposure, but you're lean into what's working.
Yeah, if I have to add right now, I'm adding to the Qs. I'm adding to the large stuff, but I love having some value because when you have an inflation scare, which could happen later this year, that value either goes up or stays solid. And you know what you do? You sell that and buy all the tech. Also, tech makes money now.
Yeah.
When I was a kid on Wall Street, 25 years old, tech only lost money. Now they can't even...
They have gobs.
They have gobs of money. It's just a different world. I hate structural changes in markets because it forces me to
have to think harder.
Harder. And all my heroes, I have to sort of put them aside and say, you're a hero from the past.
Right.
We play a different game. That's very nerve-wracking to a professional. I get it, but you have to, you can't go around it. You got to go through it.
Mean reversion is dead. I hope the next chapter isn't long-live mean reversion.
Oh, Lord.
Lee, thank you so much for your time.
Thank you.
Good to see you today. Lee Munson, Portfolio Wealth Advisors.